Hello, hello, hello. Weekly Technicals is back. Fundamentals. Let's start with there. I think there's a lot going on at the moment. This for September, especially for both Forex and crypto securities as well. And maybe let's take a look at the macro side of things because this week there was a lot of energy bills going around, being circulated around finance Twitter, people paying 5x on their typical bills. And just as of the last few days, the Nord Stream pipeline that provides gas from Russia has been shut down. And is it really all that seems? So let's just dig into that. Do you want to go over what we've got to pay attention to this week in terms of events?
Yep. Have you disabled my screen sharing?
Now I will allow you.
Yep. All right. Before I go through the current week, let's look at the last week. We had a lot of fundamentals related to job openings last week, and that caused a lot of volatility in the market. And there was a lot of contradicting job openings statistics also that came out. So last week on August 30th, we had Joel's job opening, and this came out positive, right? So this says that the job opening was higher than the forecasted estimate. Yeah, so that gave a lot of people started interpreting that as FOMC, the Federal Reserve, might hike rates aggressively, because they mentioned in their Jackson Hole speech that depending on the statistics that come out this month before the FOMC meeting, if the job openings are higher, that means they are confident that they might hike rates aggressively. So this gave a lot of indication that, okay, job openings are still at a high level, so we might hike rates aggressively. But what happened was, the next day we got ADP non-farm employment change, right? So when you look at the estimate there, it's a drastically low estimate. From 300K was the forecasted estimate, and we saw 132,000, right? So even less than half of the estimate. So this was extremely low. Yeah. So now after we got this estimate in, there was a lot of indecision in the market, right? So when we came to Thursday, on Friday, NFP, the big event, non-farm employment change, we had the estimate here, which was 295,000. And if you see the previous month, the estimate that the actual stat that came out was 526,000 jobs. Yeah. It came in a little bit higher than the estimate, but if you just compare it with the previous month, it was still much lower than the previous month. So this is now showing that we are slowing down in the labor market, and the amount of jobs, like Powell mentioned even in his speech, will get slower. So just taking into account, what happened was, when the job rate, this statistic came in, a lot of people started interpreting this as, if the market, the job rates came lower, the Federal Reserve won't be hiking rates as aggressively as they've been talking. So instead of 75 basis points, we might see 50 basis point rate hike, because if they aggressively hike rates, that will end up destroying the whole economy and the job market. So they have to find they have a really difficult job. So they have to they have to balance the economy with the consumers very delicately, because if they overdo the hikings, it destroys the job market, and in turn that destroys the economy, right? So this number that came out, we had a lot of we saw DXY, dollar index, pull back, right? So we saw dollar index pull back, yeah, and this is because of the NFP data. But at least for me, we are still bullish on dollar, so I'm still bullish. But we'll get into technicals in a minute. So this is what I saw from the last week. So the current week, the fundamentals that I'm looking at is on Monday, September 5th, we have USD bank holiday. So if you're trading on Monday, I would try to avoid trading on Monday, especially if your pair has US dollar as a base or a quote currency. If it's so, I would avoid trading US dollar. But if you have a pair like GJ, for example, and if it makes a move, then you can probably trade it. But I would try to stay away from trading on Monday just because there might be lower volume in the market. Yeah. On Tuesday, let's see. One thing on Monday, keep an eye out also in GBP PMI, yeah, purchasing manager index, and it's forecasted to come as the same as the last one, right? So keep an eye out on that. Then on Tuesday, we have a lot of news on. Let's see. You can keep an eye out on JPY if you have a pair with Japanese yen in it. So you can keep an eye out on this, but it's low impact news. So these kind of folders I still keep an eye out on just to formulate my fundamentals and see the direction the economy is heading at. Yeah. So you don't have to disregard these folders. When it comes to US dollar, we have final services PMI, purchasing manager index, and we have ISM services PMI. So if you notice the purchasing index here, it's forecasted to come lower, which makes sense because the economy is slowing down, and with the logistics issues that's going on, purchasing is going down. So that's this is a big one to keep an eye out on this week. And then on Wednesday we have a big one. We have GBP Monetary Policy report hearings. So this will be very interesting to see what's happening. So this is a big one. So keep an eye out on this on GBP. And if you're trading a currency or a pair with GBP as a base or a quote currency, and if you haven't opened a trade or running in profit, I would suggest to wait for the report to come out before placing any trades, because this might cause a lot of volatility and maybe stop hunts might occur. So keep an eye out on that. And also the comments made by FOMC members, yeah, over here. Then on Thursday of September 8th, keep an eye out on US dollar unemployment claims. And if you notice the forecast, it's supposed to come in higher, again, showing that employment is slowing down. And then the big one, we have Lord Savior Powell speaking, yeah, Fed chair. So keep an eye out on that. This will cause a lot of volatility in the market because his comments cause a lot of volatility. Like Jackson Hole 10-minute speech wiped out billions out of the market. So keep an eye out on his speech. And then on Friday, let's see. On Friday we have FOMC again, few members commenting on the monetary policies. So keep an eye out on that. But all in all, it is there are some heavy fundamentals, but not as heavy as in the coming September weeks. From next week and onwards, I think we're going to have big fundamentals. And during months with high fundamental news, we see a lot of high volume in the market. So we might see good trading opportunities as well, right? So this is what I've been looking at with fundamentals for the coming up week. Any questions regarding fundamentals?
Are you, when you say are they still considering putting rates up aggressively? And would you consider 75 basis points still aggressive? This seems to be sort of the going rate increase.
From Powell's speech, he mentioned that 75 basis points is what they're looking at. But just considering the job market, I think 75 basis point has been slowing down the job market much slow. It's slowed down a lot. So I think another 75 basis point rate hike might actually be detrimental to the economy. So depending on the statistics that come out this week and the next week, I think on the 3rd week of September, we have the FOMC meeting. So they're gonna, he mentioned that he wants to see the statistics of this month before the meeting to make a decision. So, but I think according to the futures options market, I think all the traders have a bet on 70% of a 75 basis point rate hike. So the likelihood of a 75 basis point is still high, but we still need to wait and see how these FOMC members react. And especially this week, we have a lot of comments from them. So maybe we can interpret the fundamental bias through that. Yeah.
Yeah, it's interesting to see. Like, obviously, 75 has been the sort of the going norm for increasing rates. This week, I think, has probably been the first week where we really started to see bigger cracks appear in some of the other markets. Obviously, you mentioned in there the unemployment rates as well. They're expecting those to come in higher. But like I've said from the beginning, like equities have always been a leading indicator for a market collapse. And ever since we've double topped there, we double topped on crypto. We've already seen, I think, what are we now? We sit about 40% from all-time high at this current point, and there's probably,
Yep.
I would say there's another 20 to 25% more to go.
We are 70% down from all-time highs.
We're 70% down. Yeah, so we're significantly down, but I still think there's more. The way the macro market's playing out. So there was just an infographic that went around. I shared it in the group that the level of inventory for real estate in the US is now starting to increase. More properties are going on the market. People are looking for liquidity. So this is the sort of the second tell sign. So I've always said this would be the next one to go. Credit bubble, I would say, would be the next thing to sort of pop. But this is going to go on a while, and I don't see this turning around anytime soon. This week,
Yep, that makes a lot of sense. Yep. As you mentioned, the housing thing, I even saw that BlackRock has themselves, they have stopped purchasing properties. So
Yeah, I saw
that's
that,
a big,
and Chamathas likes to just. I saw him do a big rant where he's just holding on to just all liquidity.
well,
Yeah,
this
also
is
selling most of his stocks.
well, that completely goes like that gives you an understanding, because BlackRock's, I think, mandate from very early on in the pandemic was that they were going to start buying up property, and there was this whole concern that they were going to buy up sort of the middle class property, and they'd create this huge rental market, and they'd have almost a monopoly over rental prices. So if they've pulled back on buying up property, like that tells me that they see the market going lower and they want lower market entry. That's what that tells me. I don't know if anyone else has any other thoughts on what that.
Yep, that makes a lot of sense. Yep.
And also, it's like, I mean, and even by them even stating those things, that's already going to cause that reaction to a degree, because people are just going to follow what they do.
Oh yeah, exactly. It's like having a Pelosi tracker or a Buffett.
Oh my God, dude, I've been following that the Burry tracker. There's the Warren Buffett tracker on Twitter. It's just interesting to see what they're doing.
Even the Kramer inverse. I think I saw someone flipped an account within a few weeks of following Kramer inverse.
Inverse, yeah, just do the opposite.
How has this guy held a position at CNBC and become a voice for trading? I have no idea.
Everyone makes money by doing the opposite.
Oh, it's fucking crazy. But like I think as every week goes on, I'm more and more concerned. Did anyone see in the news about the Nord Stream pipeline?
No.
Yeah, so Russia's basically said that it's going down, and this is a huge pipeline used to move gas from Russia into Germany. Russia's saying that there's modifications or there's work that needs to be done to fix it, so maybe some leakages. Germany's responded with saying that the leaks that are being professed by Russia aren't actually enough to warrant closing the whole pipeline down. So this looks at more of a political move to take advantage of, I would say, winter times when energy demand is at an all-time high.
Russia's made 400 billion this year because of their resources going up, all their oil and gas prices.
Of course, and
and it's only going to become more.
And with sanctions as well, like sanctions haven't hurt them in any means. The currency bounced back. I made about 35% buying the ruble dip. It's
nice.
This was never going to work, and like I've seen this multiple times in my career so far. Like the sanctions are used to hurt the government, but as a proxy, it's through the people. What they're trying to do is they're trying to create a disturbance within the population, so the population end up turning on the government. That's the whole point. You starve, you increase the costs, all of these things of your population. They will look at the leadership as being the cause of all this. And it just hasn't worked. It's actually Russia's held the cards through all of this. They've seen what's coming. They've predicted it. They've seen winter's almost upon them, And
They diversified. They just bought property here.
exactly, they funneled their money out. They've been clever about it, and now they
Yeah.
basically got Europe on its knees.
Yeah.
And US has actually helped it. They've been funding
Yeah.
this. They've been almost pushing it along. And the worst thing
There's
is
another.
it's the people, it's
There's
the
another
small
like 13
businesses.
billion people, $13 billion that US wants to, or 30 million wants to fund the war effort. And then what did else I see? Based on that, there's a video at one of the UN meetings, and Trump is basically telling Germany about like, hey, you need to become independent of energy. Instead of using Russia, do it yourself or do it somewhere else within Europe. And then and then zooms in on the German table, and they're just laughing at it. And then look what happened now.
Yeah, I've seen that video. He called it, and
awesome.
sovereignty was
Yeah.
everything, and he was right.
Trump's always right, despite what the media say.
Yeah.
But
I love that.
the issue is that like even if you look at obviously this week there's been a load of stuff like small businesses that barely make 3 to 5K pounds or dollars a month. Their energy bills are almost equivalent. And if you think about how, so European energy, the way it works is they, during the summer months where energy demand is actually lower because there's no heating load, they end up sort of buying up more energy and storing it for the winter when there's surplus load.
Yeah.
So all of the energy that they have stored in reserves now, whether it be in pump storage, chemical storage, whatever, flywheel storage, it doesn't make a difference. All of that has been generated at the cost of energy right now. So that burden cost of energy is going to be paid off for the population through the whole of winter. So it's not like the governments can say, oh, well, we can't, we'll step in, or that these prices aren't right. They're stuck like this now. There needs to be, the only way they can come in is say, okay, we're going to nationalize all energy or we're going to subsidize. But I think the deficit for all of these countries is way too high for them to even look at subsidizing energy costs right now.
I heard that. Well, I've seen an article saying the sanctions on Russia have hurt them a lot more than what they're saying, and the Putin's manipulating the data. Because even like the ruble, for example, it's not traded on any platform. You can't trade the ruble. It's actually worth fuck all. I don't know if that's true, but like this guy was saying that all those numbers are fixed, and that he's actually manipulated the data to show that it's fine. Like we've seen that bounce back in the ruble. But no one will buy it. Like these other big countries won't buy ruble. So he's saying that basically it is on a decline, but he's hiding it because of obviously he doesn't want to lose face to the people.
There's probably an element of that. Like at the end of the day, it's something that needs to be done. Information does need to be controlled. But when you look at the sort of dollar dominance that's dropped with trade, Russia's been going out on its own accord, obviously through these sanctions to try and sell its main resource. And they've been facilitating all of those transactions in ruble. They almost mandated that if you want cheaper oil and gas, well, you've got to do it in ruble. So they've removed dollar dominance from the oil trade industry. So yuan and rubles now increased there. So to an extent, I think he is managing it very well. I wouldn't say he's fully hiding it. There's just mechanisms and means to doing and operating, I would say. But this isn't changing. And I see, you've got breaking news up, I can see.
So US and Europe want to collaborate with the energy crisis. This came out yesterday. So US is trying to fill Russia's shoe with the Nord Stream 1 pipeline shutdown. So we got to see how this develops, how their thing develops. But they say I don't think it's going to suffice. Yeah, just US stepping in, because and Russia also, they mentioned that Russia as well, they're using the pipeline as a weapon against European consumers. So it's all planned. I mean, so this energy crisis, I think, especially with winter around the corner, I think it's going to be huge increases in energy bills, like you mentioned, and especially how Michael was mentioning about ruble and how the numbers might be manipulated. It is true when it comes to communist governments like Russia and China, the statistics that come out, I take it as a grain of salt because they are known to manipulate those numbers a lot. I mean, I'm not saying that US numbers are not manipulated, but the numbers that do come from communist countries seem to be way more manipulated. So it is true.
Did you get the leak from Huawei to Russia? There was a memo that leaked, and he's basically said that. I mean, we've seen the progression of Huawei over the years. They've like become this global leader in tech, and now he's actually took a defense where they're saying that they're going to have to cut back and focus on surviving because of the current climate. But again, I think it shows that obviously China are not being completely honest with their circumstances either. The government put a lot of money into Huawei, trying to compete with the American tech companies, and this leaked memo has caused a bit of panic.
Yeah, Huawei's been hit hard. Like obviously losing market share in the US by being sanctioned was a hard one. I think being in the UAE, there's such a close relationship with China through loads of these G2G relationships, and Huawei is one of them. So I guess I've seen some of the things that Huawei's done to try and navigate it, and one of them is that obviously Google Play Store and a lot of like the major Play Stores don't support Huawei phones anymore. So Huawei went and they created their own OS system and created their own app store. What they've done is they've actually tried to create, I would say, more of a Western front. So if you go to the Huawei shop here, like the retail brick and mortar store, it looks like an Apple showroom. It's clean, it's fresh, it's that same sort of minimalistic touch that they've gone at. Another thing that they did was they spun off a new brand name called Honor, and this Honor was sitting under Huawei. It was called like a Huawei Honor, and it was like they had a whole flagship range of phones. Now Honor sits as its own brand. And then there was a new article that came out this week that I think it's the P50.
Wasn't Honor like an Indian brand?
No, it's Chinese as well. It's actually it's state owned as well.
Okay.
But the new Huawei P50 Pro, that's now being is being released under 3 different names. One under Huawei, one under Honor, and another under some I think it's like TJ Tech or something like that. Some random name. So they're almost trying to confuse the market with what is Huawei.
Well, this is what he said here. This is part like a statement from him. He says Huawei must reduce an overly optimistic expectations for the future until 2023 or even 25, and we must make survival the most important guideline, and not only to survive but to survive with quality.
Very fair.
That was just a caption of some of the memo, but
I think China's got their own shit. Like this energy crisis isn't only affecting Western world like the US and Europe. China's got major power shortages, and obviously I've got a few businesses in the energy space. So solar panels, we've been told that the prices of those, we had a major increase in price on those due to the price of silica going up, the raw material. And then there was power shortages in China, so they reduced their manufacturing capacity. They're saying now that those power shortages are now coming back, so those prices are going to go up again. They're still having lockdowns with this whole zero COVID policy. So supply chains affected globally, with still most of manufactured components coming out of China. So from that perspective, China's still hurting the West with supply chain issues. But look, they've got major problems on their real estate sector with Evergrande's collapse. You've got they actually ran a similar model to what was run here in Dubai, and like we saw it in 2008, where there was a significant amount of properties that were bought off plan that never came into fruition. There's even more so in China, where there's so many that haven't come to fruition that people are just decided to boycott paying their mortgages. So none of that liquidity is going into the market. So all of that debt is going to either have to be written off, I would say, and none of these projects are going to come out. Obviously, China's a lot more socialist than the ecosystem that exists here, where there's no chance of a bailout. It's your own risk to take. But China will bail out those larger corporations to make sure that they survive, because it's this whole socialistic capitalism at the state level that runs the country. So they need to, in essence.
Just a little bit more on China. I have a friend, and they were saying that they're in really bad conditions in China itself. He's from Shanghai. Again, as you said, the zero COVID policy. And also there's a meeting coming up in 16th of October, if I'm not wrong, with the premier and the president. And that can go either way, because the general population in China, where they used to be very nationalistic, right now they're not happy with the president, what's happening there. So that also something you need to look and take into consideration what's going to happen there. And with the Taiwan situation as well, the general people there are just not happy with what's going on there.
What's like, I don't know if you've had this discussion with your friend, but as a Chinese national, what's his thoughts on the Taiwan situation? Does he, as a resident non-government employee, consider Taiwan part of China? Do they care from a citizen level?
This is coming from the guy who always believed that it's the US propaganda, and then Corona never started from China, and the long-time believer on that. And then now he's saying, his president has just messed up everything, and what this Taiwan issue, leave them alone, and we are just sort out the mess which has been inside the country with what's happening. This guy till now has done 160 PCRs, so he's like mad.
That's a lot of brain tickling.
Yeah. So the narrative has been changed. Again, this is the guy who's living over here, but then his work is over in China, and then he is Chinese itself, and you can see a big shift from being very patriotic, and now they are just literally openly talking to a Indian that China is a mess. So, and as Taiwan, I did mention about Taiwan, and Taiwan, they say that just leave them alone. We need to sort out our own mess first.
Yeah, I completely agree. I think domestic policy should be the priority for every country right now. I think it should be everyone's priority. The US has this huge investment into foreign policy that's just caused a lot of global issues. But if all of these countries were more focused on their domestic policy and fixing their own backyards before they looked into someone else's, the world would be a much happier place, and probably wouldn't be in the situation it is today. If countries focused on having sovereignty, owning their own critical infrastructure, none of these issues would be around. They'd have the manufacturing capacities to cancel out the supply chain issues or minimize them. They'd have the power generation assets to be self-sufficient, but there just hasn't been enough priority on this. And this is where globalization is really failing, because globalization still revolves around a singular polar system, which is the US government. It just can't work. I think countries do need to build out their independence. And yeah, trade agreements are a necessity, but critical infrastructure should always be maintained by the sovereign. The fact that you can allow your energy to be privatized, like, sooner or later, people are going to realize that energy is the currency of the universe. And it'll probably be through these next sort of 5 years. It could be even longer. Look, I think if with major supply chain issues in China and the power shortages, all of these countries that are pushing for this cleaner, renewable energy, solid, like having sovereignty, like it's reliant on China. None of them have the sort of domestic manufacturing capacity to support this energy transition. And if they do, it's at a very high cost. So they do need to subsidize with product from China. And like, being in this space, I've got some projects, and bearing in mind I've been in every variable of this industry. So from a developer standpoint, it's a 3 to 5 year sales cycle to get all your permits, your licensing, your feasibility study, to then building out the project, doing all the procurement, commissioning. That's 3 to 5 years. So you've got 3 to 5 years of high energy costs. And in the meantime, you're probably going to have some limitations on the grid in terms of how much you can actually unload onto the grid. So energy storage is going to be another thing. And do these countries have the budgets to pay for it? The answer is no. They're going to rely on you and I and independent retailers, all of these sort of working class who are going to provide all of this liquidity at the sake of their life savings. Wow, that's a painful sadness that's going to hit the world.
Yeah, but I keep mentioning it's going to be a depression. It's not a recession
Oh
anymore.
yeah, it's
sure.
gone beyond that point. And
Yep.
if you look at like a good recommendation actually from your point is that breaking news feed on Twitter. Like
Yep.
there's been probably 4 posts in the last few weeks for the US going to Congress for billions of dollars for nothing to do with their domestic policy. Another like 13 billion for Ukraine. Like that's not supporting anyone's domestic policy. That's funding and fueling more of this energy crisis than anything. And
I have a lot of opinions about that. Actually, if I end up giving my opinions, I think I'll get cancelled off YouTube.
I think there does need to be a bit of transparency on where the spending is going. Let's leave it at that.
Yeah, let's go.
Should we look at some charts?
All right, let's get to the fun bit. All right.
All right, what's our hit rate from last week?
2 were in consolidation, so you would have not taken any trade basically, and the rest were all 100 hit. So, yep.
Wouldn't you call this a double bottom on BTC?
Not really, because to me, the way I'm looking at this is, let me show you. Just by looking at structure at the moment, this kind of looks like, you know how we discussed complex pullbacks. This looks like a complex pullback, and it created a lower high. We see a nice bearish engulfing happen. We saw a follow-up bearish engulfing, and if you notice the wick of the current the previous week closure, there is no wick at the bottom side. That means sellers were in control till the market was closed. So that shows me a lot of bearish momentum. I would call this a double bottom if this week closes next to in this level here and kind of rejects this level, then I might call it a double bottom. Yeah. All right. Let me look at this from the monthly time frame, because last week we just had the monthly candle closure happen. All right. So from the monthly is like I mentioned, is closed inside that range from the previous month itself, from July. So July and August have been a little bit stagnant, which is natural during summer months. And we saw it close around, we had the low at 19,500. So I have marked out the August low here, if you notice. And then on the weekly time frame, just like I mentioned to Missam, we had this lower high created here, a nice bearish engulfing, another follow-up bearish engulfing with no wicks to the downside, indicating a lot of selling pressure still in the market. And if you notice this week's candle, it hasn't closed yet. So this is why I haven't marked out the highs and lows. But if you look at this week's candle, this is showing me a lot of rejection towards the top, but also showing me maybe sellers are exhausted, maybe because the volume has been dropping. So depending on if the candle closes this way, there's a possibility of a pullback. And this pullback was also mentioned last week, which did not happen this week. This is why BTC was consolidating. So if you look at that, and then let me go to the daily. Daily has a much more details here. So if you see these green lines that I've outlined, this was marked out last week. So I mentioned last week that price might retrace to this area here where I drew out this range. Let me delete this so I can redraw this. 1 second. So I mentioned from the previous week that I want to see price maybe retest this area here inside this area. It did not give us a retest technically, kind of came up, but if you notice the range, it's been creating a consolidation inside this range here. Yeah. So coming to this week, I still would like some liquidity to be grabbed up there. By just looking at that weekly candle forming at the moment, it looks like we might get a pullback possible. Yeah. So if price pulls back, I would look at maybe with enough confluences, if price comes down inside this range around 21,500 to 20,800 range, I would maybe look to take shorts. But if price doesn't give me any confluences, starts breaking above the weekly highs, which was the previous week highs, not this week's high, which the weekly candle still has to close. If it breaks above, there's a possibility we might get a retest at the 23K area, which would be my next area of interest that I would look at to maybe take a short if it makes sense. Because after the big drop had happened, we had zero retest happen at that region. Yeah. So the previous week and this week's analysis are a little bit same because price has been consolidating. We just have a little bit more information, especially from the weekly time frame. So what I would look at is actually I have maybe a lot of scenarios here when it comes to BTC, but by just looking all of the time frames, all of them are bearish. Therefore, our multi-time frame correlation is making sense at the moment. So I would say scenario one, maybe we see a retest at this region here, 20,800 to 21,000, let's call it 300. In this range, maybe we might get a retest and maybe we can look to take short positions. Yeah. Or if the lows break of the week, the absolute lows, which were the previous week lows also. So if this low breaks here, which would be a nice high probability short to me. So if you were taking shots in this area here, I would split the risk, maybe take a lower risk position there, take a little bit higher risk position at 19,500 break. Okay, so if this happens, that would be would make sense. But if price rips through, we see a nice retracement happen all the way up here to 23K, then I'm keeping an eye out to see what's happening here. So if it makes a lot of sense, I might take a short here. So as price retraces above, right? So as price retraces above, here I'll take a lower risk. Here, even above, I'll take even more of a further lower risk, right? So it depends on your risk tolerance. It's up to you. But say we see something crazy happen, BTC breaks everything, and we are now bullish, then the long positions would occur up right here at the top. So I would take long positions up here at 24,500 if it makes sense. But my bias is short, so the main range I'm looking at is inside this big range here at 23K all the way to 19,500. So we have three scenarios that can play out with the short positions this week. Yeah. So that's BTC. Let me look at the 4-hour time frame just a minute. You just say choppy movements. You could not trade this range this week. Therefore, just by following the last week's analysis, if I said if the lows break, you take a position. Lows did not break. We did not see a retest either, so you would have made no losses here, if right. So that's the name of the game, patience. Yeah. Any questions regarding BTC before I move into Ethereum? Yeah, clear. All right. So Ethereum. Look at Ethereum. That's really nice. Like look at the last week I had highlighted this, that scenario one would be a retest of this area. Look how perfectly price went up, retested and wicked that area there. You taking a short position at that area would have given you a nice return. If you see it broke out, your TP area would have been in there. Now it's kind of retesting the previous broken supply demand area. So that worked out perfectly. Wait, let me delete this here. So
looking at that, would that be starting to, the way that trend's going, we're seeing those higher highs on the smaller time frame there, would that be retesting the towards the 1700?
Towards the 1700, yeah, possible. Yep, because just looking at the 4-hour time frame, structure looks bullish. So but it's been kind of retesting that support area there thrice, and you can even maybe consider this a triple bottom, but you got to wait and see. We need to look at see, this is why I say confluences make sense, but the confluences have to make sense with the multi-time frame correlation. So if your higher time frames are saying bearish, then only take confluences that say they are bearish, right? So just by looking at this, the monthly closure, which is a interesting looking candle there, we see price started breaking above, wicked above, and we see a very small range that in tight range it has been trading in. So just by looking at structure, we see bearish structure. Technically, lower highs, right? Lower highs, lower lows, lower highs, lower lows. Now we are the range. I think we can consider this as a lower high. So we gotta wait and see. On the weekly time frame, Weekly time frame is interesting at the moment. If you let me actually delete this line and show you what I'm looking at. Say I had to draw out trend line there. There. All right. So trend line is suggesting a pullback to me. By why that's the case? Because here we see what a new lower high been created. But the issue here is I also see higher high, and this some people might be considering this as a lower high because you see how the bearish candle closed with that bearish engulfing.
Yeah.
So this is kind of giving me indecision a little bit. So if you see that, so on the monthly, I see bearish. Technically, it looks bearish, but I see the bullish momentum die off, and the sellers came into the market and closed. So sellers were in control with the monthly closure. But when it comes to the weekly, I see price just by the recent price action, I see nice bearish action. But by this coming week, I see the candle still is rejecting with buyers exhaustion towards the top, but I gotta wait and see what happens here. Let me maybe look it down in the daily time frame. We might see a little bit clear details. So daily time frame is giving you nice clear bearish structure. You see that lower high, lower high, lower high, and if you see the previous daily closure there, we have nice rejection towards the top. Again, considering that we have a lot of sellers momentum, right? So I am bearish on Ethereum at the moment, but I do not like this area that was created here. So just because I don't like this area created here, one thing you could do is be a little patient with this pair. So I would say take a short position only after this area here breaks and this trend line here breaks, which should be around that 14,022 to 14,020 area. Let's call it 14,020. 14,020 breaks, we can take a short position, and I think that would be a better, higher probability short position to take. Yeah. But if you were a little aggressive with Ethereum, we got that retest that happened last week that I mentioned. If you were holding that position, you would be in a lot of profit. And if you were running in profit from the last week's position, I would just hold that position and see ride that position through to see if it goes below. So if you're already in profit from the last position, I would move your stop losses to break even and just ride that position out. So at the moment, the only way I see opportunities if you're not in that position is to see the break below here at 1420. Yeah. And then if price retraces all the way, we see a nice big massive price gap there, yeah, at 1820. So I would look at here, and maybe if it makes sense, I might take a lower probability short position, which would also correlate with that trend line retest there. Yeah, so that would be a confluence of a rejection there and a retest there, and then maybe I'll take a short position, maybe targeting these lows. And if this lows break, maybe go to these lows. If these lows break, then we go to these lows. If we come to these lows, I would scale in again, scale in and ride the trend. Yeah, like I said, trend is your friend, so ride the trend. But if Ethereum flips bullish, the weekly candle closes maybe bullish this week, who knows, right? And we see all of the structure points break, then only long position I have. I've already said this. You see that from the last week, the green line. I've said this already, that the next position I would take a long position would be at 2017, 2020 area. Yeah. So if 2020 breaks, then I might take a long position. But from all the timeframes that I see at the moment, they're giving me bearish momentum. But only thing I don't like is this low been created here. So just gotta wait and see if this breaks. Or scenario 2 would be a retest above here at 1820. Yeah. So those are the two things that I'll be looking at this week. Let me actually mark this out. So that's that area and that area. These two areas are area of interest to me. Yeah.
Cool.
All right. Any questions regarding Ethereum? All clear? All right. ETH BTC. Let's look at ETH BTC. I haven't even looked at the pair. Just by looking at the pair, we saw that I've circled this out here. Let me see. I'm just reviewing the last week's trade. So yeah, I mentioned that if you break above here, we would take a lower probability long position. Low probability, I mentioned this. So if you notice, if you had taken a long position here, you could probably have made a good amount of profit if you targeted. If you were in a trading course, you would know that if price starts giving you these kind of doji candles, this shows you a lot of confluences to get out of the trade. So if you had taken a position here, you would have made a profit by taking your confluences. Yeah. But okay, let me just delete this and go through all the time frames. All right, so on the monthly time frame, let's see. Monthly time frame is interesting. I keep saying this. It's because it's kind of interesting because, like, if you see with the monthly time frame, it created head and shoulders there. But what happened with the head and shoulders? It invalidated the head and shoulders. I would naturally want the price to do what? Come retest the neckline of the head and shoulders somewhere here and then drop. But that did not happen. It invalidated it. It broke the trend. Even broke the last highs on the last lower high on the monthly time frame. So technically, I remain bullish on ETH BTC, and it makes sense as well. I think Messam also mentioned Ethereum merge happening, right? On 15th of September, maybe we might see a lot of fundamental momentum come in. Yeah, so that's happening. And with the last month's closure, nice bullish candle. But that candle, if you notice just the body of the candle, you see the wicks towards the top and the bottom. It's kind of a little bit indecisive, but still, I would consider that as a bullish candle. So we are bullish technically on the monthly. On the weekly clearly bullish. Like, I mean, you see that nice retracement happen there. And now this weekly candle would be very interesting to see because we still have 12 hours for this candle to close. If this candle can close above that level there, above, that would be interesting. Otherwise, I think on the lower time frames, this might be considered as a double top. So, and if you even look at the previous candle, previous week's candle, we see a nice rejection. So I don't like that, right? Then on the daily time frame, yep, daily time frame, one, double tops, right? In fact, you can even call this triple tops. Yeah, and also if you notice the candles, you see how it made that triple top there, and you see when it made the triple top, it had a massive rejection towards the top, and you see how the volume is dying off a little bit. So I don't like that. Yeah, so this, you got to play it safe. If you're going to trade this instrument here, I would say patience would be key this week. Maybe only take entries only after the last weeks. Maybe even if you want to be extremely conservative, I would say let the whole structure area break here, the whole structure area, right? So take a position above at 0.82, let's call it 0.82, 0.082, sorry, 0.082, take a position and maybe ride that position above. Because we are fundamentally also bullish on Ethereum at the moment, and our higher time frames on the monthly, weekly are bullish, technically, the structure. Even if this could be interpreted as in many ways. So during times of, if you look at the daily time frame, right, people can interpret this as, okay, this is a triple top, for example, whatever, we can call this a triple top. But maybe someone be interpreting this as, okay, this is a low, we see a lower high, sorry, a higher low, another higher high. So in these kind of situations, we might see a lot of choppy movements. So this is why I want this range to break. If this range breaks above a 0.082, take a position to go long. So a higher probability position will be 0.082. Yeah. But if price flips bearish, I would like to see the range right below here break. Right? If this range below here breaks, then we can take a position below. So this would be at 0.07250, a quarter point, I think, for this pair. So these are just two scenarios I'm looking at. I don't know. I don't want to touch this range inside here. Yeah. So just by looking at even one other confluence could be, you can see that how the trend line broke there. So our bullish bias is playing out at the moment. So I'm going to be very patient with it before taking any trades. Yeah. Let me look at the lower time frame if you have anything here. Yep, I say nothing. Just do nothing here. Just be patient with it. Yeah. Any questions regarding this pair? All clear before I move into commodities and forex? Yeah. All right, so let's look GU. GU has been interesting this week, extremely interesting. GU trade played out well. If you had taken a position there, you will have like literally, I think maybe even 12 times your risk. Yeah. So it was an insanely good trade on GU if you had taken that trade. All right, so on monthly time frame. Look at that monthly time frame though. Like if you look at towards the left, we don't have any data. Yeah. All the way, I'm looking at the time frame all the way up to 2002. Right? So, and plus, if you look at the previous week's candle on the on GU, see how it closed bearish, and a candle like this has never been closed in this area ever that way. Yeah. So that's a clean bearish engulfing, right? And we are about to almost come to the all-time lows, which is mad on forex. Price discovery rarely happens. So if that's going to be happening, you can tell how insane the times are at the moment. Yeah. So clearly bearish on monthly. Weekly, I mean, this clearly bearish. A nice clear lower highs, lower lows. Yeah. And it also broke the last lower low, right? We see a nice move below. Let me move the weekly high and weekly low. 1 second. Right there, that's the weekly low. And then let me move the weekly high. There we go, weekly highs move. Okay, so nice clear bearish engulfing. I mean, there's too much seller's momentum in the market at the moment, right? So that's bearish at the moment. So at the daily time frame, I mean, like it's been daily for I mean, literally pretty much all the trading days, it's been just straight bearish momentum. So it would be interesting to see what happens this week. Just by looking at this candle, this is still a bit of bearish, but a little bit indecisive as well to me. Maybe I might look down in the 12-hour time frame to get some details. 12 hours is giving me bearish engulfing. I mean, everything is bearish at the moment with the GU. So the only thing I would do, maybe be a little bit wary of this pair because we are approaching all-time lows. And if you notice this this blue dashed line that I've drawn out, this is the daily low. So maybe if you want to take a position, you can take this right out. Maybe this trade might occur tomorrow itself during market open. So maybe take a short position there at 1.15 and maybe ride this out to all-time lows, which is around, I think it's around here. Let me double check. Yeah, maybe ride this out all the way to 1.14-ish area. Yeah. But I would be very careful, mitigate your risk here because we are approaching all-time lows, and not only approaching all-time lows, we've been in a huge bearish momentum since few days. We are due for a retracement. Yeah. So that would be position one I would take, or as I said, we are due for a retracement. That means I might look for a retest, right? So if price goes all the way above, comes to an area here at 1.18, let's call it. Yeah. If it comes to this area, I might, with enough confluences, I might take a short position. So this is what I want. Scenario one, scenario two. But if you want to counter trend this pair, which I suggest not to, if you do, take a lower probabilities long position above the break of these the structure area here, which will be 1.18500, a quarter point. Yeah. Any questions regarding GU? All clear? All right, so let me look. GJ has been very interesting. I mean, GJ has been choppy. If you see how my my chart has been marked out, the price has literally not moved. Let me show you from the monthly actually. Let me go through the monthly time frame. Okay, let me delete this so you can see the chart a little bit clear. So the monthly time frame, what do we see? Indecision candle, yeah. But technically, we kind of see, what do we see on the monthly? We see it was an indecision candle, but what do we see? We see the monthly structure break, right? These lows here broke, yeah. And it has been retesting those lows for a while now. If you see, it's been retesting that lows. So it's broken the lows, which is giving me a little bit of bearish momentum in the market. Maybe sellers might be swooping in. On the weekly time frame, I mean, weekly has been choppy for the last few weeks, right? And especially you see how price is approaching into this tight range inside here that I've drawn out on the daily time frame, the lines. If you just look at the weekly time frame, see how the bearish momentum is there, and we see, what do we see here? Low, another low, prices keeps pushing low, lower and lower. Yeah. So, and this candle here, you see how we have a big exhaustion towards the top, suggesting sellers are in control still. But buyers have been swooping into the market around this area here. We need to see this area here break. Yeah. So that's what I've been looking at on the weekly. But I don't like the weekly candle at the moment. I want to see this range break still. Yeah. On the daily though, on the daily, let's see. On the daily again, just like a weekly, nice, just choppy momentum. Yeah. So what I want to do is, I want to the last week's analysis still holds true to this week. Yeah. So I would maybe want to wait to see this area here break, take any positions, which are the weekly lows as well. So that would be confluence 160,700, 160,750 area, which is a quarter point. If this area breaks, I might take a short position. So this is the only area I want to take. I don't want to take a higher risk positions. Maybe you can take a higher risk position if this area here breaks, but I suggest not to, especially as we are trading in a very tight range here. Yeah. So let that area break. And that's the only, probably this or these lows here at 160 breaking. These two areas are the only areas that I want to see break to take any positions. But if the price flips bullish, the area above here at 163,500 would be an area I would take a long position of. So it's pretty much the exact same analysis as last week, because it's just been consolidating and it's been choppy. Yeah. Let me look once into the lower time frame. You see how it's been trading inside the range, just touching that trend line again and again and again. So just got to be a little bit patient with this. Yeah. Any questions regarding GJ? All clear? All right. Now let's look at the Big Daddy gold. Yeah. All right. So gold has been interesting. A lot of volatile movements, regardless of the summer period. You see how the last month closed. The last month, you see how there's no wicks towards the bottom. That's showing me a lot of sellers are still in control in the market. Yeah. And just looking at structure here, clear bearish structure. Very easy to identify. Again, with weekly, nice, clear bearish structure. If I put my drawing mode on, if you see how we've been creating what? Structure, low, low, yeah. So all we have been seeing is lower lows, lower highs. And now at the moment we are at this area here, right? So this is we are at a very interesting area here. Why do I say that? Is because if you look at the monthly time frame, we are approaching a low, a very interesting low here, which is also the pandemic lows. You see how when the lockdowns happened and during March 2021, this is where the lows happen, right? So, and even during August. So we are approaching those lows. I think maybe if you look at the maybe we can have big high probability moves happen from here. Yeah. So on the weekly time frame, see how the weekly closed. I do not like how the weekly kind of double bottom here in a little bit. If you see that at 1690, right? But we are clearly bearish. We are bearish on all the time frames from monthly to weekly. Let me delete that. Let me close this. Okay. So on the daily time frame, on the daily time frame, nice, clear again, nice. What do we see? Nice, clear structure. I mean, structure has been extremely clear here. Yeah. Now this last daily candle, the way it closed, it gave us that bullish area, like bullish push towards the upside. So let me do one thing. Let me move the highs and lows of the, I don't know, where is it? 1 second. Let me see. Yeah, the lows are here. You see how I've clearly put down the dashed line, the low here and the high here. On this daily time frame, I see a pullback happen, but we are clearly bearish. Maybe this pullback can happen, which I have been looking at 1720 area. The reason I have also mentioned this in our trading group. The reason is because if I was on the 4-hour time frame, I was looking at this area here, because this area gave us a nice strong resistance here, right? So I want to see what happens here on the 4-hour, the 1720 area. If not, on the daily time frame, maybe a whole pullback, a big pullback all the way up to the structure area here at 1736. Yeah, so scenario one would be 1736, 1735 area here, short position, a retest here. Or if this area doesn't hold, yeah, if this area doesn't hold, then I'm just chilling. I don't want to take any trade till this area here breaks. Would be a lower probability long position at 1758. Yeah, let's call it 1758. If this area breaks, a lower probability long position. But at the moment, with this much bearish momentum, I would stick to taking shorts. This area here, or 1720, I want to see what happens here. I'm not going to take a short position here. I just want to see what happens there. So scenario one there. Let me actually delete this here so you don't get confused. So that one position there, or second position here at 1695 area breaking here would be the daily low breaking, and also the weekly low which is close by. So what I could do here, if you're going to take a short position in this area here, sorry, at the 1695, split your risk. Take half a position there, and then after the weekly lows, and also the supply demand area here breaks at 1688, then maybe add and scale into a position, because now we're going to be approaching that all-time lows. If you look at the weekly chart, this area here is a big area of interest to me. If this week we can see a retest of this area, or a break of this area here, which I would suggest, if this area breaks, which is also the July low, I'm taking short positions here aggressively at 1680 break. Yeah, so we are in an interesting range with gold at the moment. So this is what I'm looking at with gold. Scenario one, scenario two, and if it breaks the highs, then long position above here, scenario three. Yeah, any questions regarding gold? All clear? All right, so maybe let me look at DXY chart. Once we saw on the DXY on the daily time frame, we see that bullish movement up, and we see how the wick happened there. You see how the NFP job report came and all the liquidity was grabbed out of the market, and see how it closed above. That's clearly bullish. Still, we're bullish. We have been bullish on the DXY for a very long time, for the last year pretty much. Yeah, so now I want to see again what happened. We saw the last week's highest break. Now I want to see this week's high again break. And this here, by the way, I mentioned in the group at 110 area here, breaking 110. This exposes us to big momentum movements, because if you look at the weekly time frame, what do you see towards the left at this area here? You see how price has been on weeks on end, straight up momentum. So we might see this kind of momentum repeat itself. Yeah, so I might keep an eye out on this 110, the highs breaking. Yeah, that's it. So any questions regarding technicals before we end the call? All clear?
Yeah, man.
Yep. All right, boys, we good. All right, Aaron, you can stop the recording.